Why is STI breaking new high? There are fundamental, technical, and psychological reasons. Amid ongoing global uncertainties and inflation, Singapore has attracted flight to quality investment from overseas investors. And this trend appears to be continuing. The index broke above its key resistance level during the third quarter of 2024. The market has finally transitioned from a long range-bound phase of nearly 20 years to showing signs of a potential long-term trend. My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlations between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Back in 2022, right after the COVID lockdown, I assessed that Singapore had emerged stronger, becoming a regional hub of technology, finance, biotech, and trade. And being one of the first countries to reopen air travel, Singapore also became an aviation hub and potentially a green hub. I believed then that the STI should eventually break above its 20-year range. Why was it trapped in a 1,000-point range for almost 2 decades? Many dismissed it as a boring market, but I view it as a range of investment opportunities. The reason for the range was its composition. Heavily weighted in the banking and property sectors seen as safe but lacking the growth momentum of technology. Its early breakthrough came in 2022 when inflation hit 9%. While the Nasdaq fell sharply, Singapore stock moved in the opposite direction. From my memory, I cannot recall such a strong divergence from the US market before. Funds were clearly viewing Singapore as a safe haven. At the worst point, the Nasdaq dropped 37%, while STI was down only 14%. Singapore is also one of the largest investors in China and Asia. Any shift in economic activities or trade position towards Asia benefits Singapore's companies directly. In September 2024, China launched an unprecedented stimulus blitz, including measures to support its capital markets and signal willingness to do even more if needed. Their stock market broke new highs. In the same month, STI also broken above its 16 years high. Because of Asia's rising economic position and the need for safe haven amid geopolitical uncertainty and persistent inflation, I believe the STI could break out of its range and begin trending higher. This was my basis of my presentation in Q3 2024. We discussed that if the STI closed above its major resistance at 3,005, the long-term range might transition into a trendy market. By the end of Q3, the market had closed well above 3,005, and today the STI is much higher. Recent studies show that the STI has now moved from a range-bound phase to a value stage. In my view, Singapore's hub status has expanded beyond finance and aviation into green industries and energy. Unlike the past, when growth was capped by the index's narrow composition, Singapore's position as a regional headquarter hub alongside banks and other sectors should continue to benefit from Asia's structural shift. I will continue looking out for opportunities to buy on dips as this trend develops. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to our channel. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.